You're in the Business Insurance Zone with me, Steve Savant, National Insurance columnist and financial color commentator. And today on The Biz, we're talking about guaranteed universal life, all the whole grid on non-smokers. It's interesting, the difference between first place and 20th place is about 20%. I'll be right back.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone. I am Steve Savant, and you're watching The Biz, or the Business Insurance Zone. And we're broadcasting live from Fountain Hills, Arizona, home of America's largest fountain, to a nationwide audience of financial advisors. And with me today, the goddess of the grids, the sister of the spreadsheets, Jessica Lopez. Welcome back to the show, Jessie.
Thanks, Dave. I like the sister.
The sister. Yeah, I'm the brother. I'm the brother of benevolent underwriting. She's the sister of the spreadsheets. Really, I mean, this is one of the things that we've done at our shop here at Brokers Alliance, really, is to really consolidate and spreadsheet everything. And I mean, if you told me back in the day, 10 years ago, that we were managing the nuances of cholesterol, BMI, cigarette smoking, all this.
Painstaking.
Yeah, it's out there. It's out there. But today we're getting past it. Now, if you're a true termite, you might remember that we're talking about guaranteed UL. Most of these contracts do not have any cash value to speak of. There's a few anomalies. I'll tell you about them in a second. The first thing I want to do is I have a gripe that I got to get off my chest.
Please do.
Okay. As you know, we have 5 different categories, health categories, before you get into rated cases. So I have super preferred, preferred plus, preferred non-smoking, standard plus, and standard. Now, fair enough. And I like to use dial a death benefit or select my durations of guaranteed universal life just to make sure I'm matching everything up and trying to get the lowest premium for my client. But how can you sell a GUL age 90 on a super preferred woman who's 62? Now, this is a case that I just saw where I said, this woman, according to the Society of Actuaries 2008 VBT tables, valuation-based tables, this gal is going to blow by 90 all day long.
Yeah.
And the reentry or catch-up provision for the premium after 90 is so horrific, who could afford it?
Yeah.
So I want you to be careful. If you're using substandard and using GUL 90, GUL 95, I kind of get that. I kind of get that because they're not supposed to see those ages.
Right.
Table 2, 4, I get that. But what I don't understand is to win the premium war, we're shrinking the duration down to age 90 for super preferred, preferred plus, and preferred. And I'm telling you, you're going to get caught. And this is why I bring up this idea. I have no problem showing it to a client, but I'm going to also show one that I think is going to be reasonable. So it could be 90 to age 100. And when I look at the tables, even if you don't want to get deep into the Society of Actuary tables, we have, and we're happy to give this away, we have this in you can write me, the 2001 CSO standard operational tables. If you want to see those tables, you can write me, thebiz at brokersalliance.com, or just call 1-800-290-7226, extension 147, and we'll send it out to you. I just happen to use the newer one because it's an upgrade, and it's really not public. It's out there in the public, but who can read it? It's a 190-something page report. I mean, if you have insomnia, that's the report for you. I mean, just think about that. Actuaries wrote that.
Oh my goodness.
Now, the reason I bring this up is because when we hit these grids, I have stripped out age 90, age 95. Anybody that doesn't touch 100, I pulled off the grid. Now remember, again, we can manage down and shrink it if I'm in substandard land, if I'm in smoker land.
Right.
But I really want to stay, if I'm in preferred, I think it's a real big stretch to try to say I'm killing the policy at age 90. Okay.
Absolutely.
That being said, now that I've gotten that off my chest, because
Great information, though. Everybody needs to know this.
it is, and every time I go and compete, I always do what I call book, especially in this arena, I do what's called book-in quoting. I will show you the age 90 because he asked me.
Right.
But then I'm going to look at the client. If I see the application come in here and I'm reading the family history, and I'm thinking, this guy's going to go some area of preferred.
Right.
If that occurs, I'm going to then send another illustration and say, you really should show them both.
Right.
Here's what would happen at age 90, which is the cheap way out. But for a little bit more, and sometimes, and we're going to see this on the grids today, for just a little bit more, you can have this thing at least to 100. And remember, I can't believe this, and I've been in this thing 30 years. We're now at GUL land out to age 121 on most of these grids, but heads up. Several carriers now have deserted actually in the contract putting the actual age 121 or whatever, and they say now life of the insured. They didn't even put an end game on it any longer. I mean, that's where we're going. And think of this, we issue to age 90. If you missed Monday's show, Jesse went on a grid that we have, and you can have it on age 90. Who offers insurance at age 90?
Exactly.
But we're already hearing carriers talk about second to die, where the male or female can be 95 and the other person just has to be under 90.
Yeah. That's
Issue
phenomenal.
age, not
Yeah.
maturity date, not endowment date. That's the issue date. I mean, this is the mortality revolution on steroids.
Yes.
Okay, so let's talk a little bit about the grid work.
Uh-huh.
We're going to do 45 and 65 because I want to kind of give you a kind of here's the middle America, and then a little bit more in the geriatric zone and in the baby boomer. And then I'm going to talk about something surprisingly on these grids. Single deposit, guaranteed, one pay, walk away. I mean, I love this. Let's talk about it.
Absolutely. And what we're covering right now are all going to be based on non-smoker rates, correct, Steve? We're going to go over that first.
Right.
Right now we're looking at $1 million death benefit, male age 45, Genworth with their Colony Lifelong product. We're looking at preferred best non-nicotine, $5,653
For
per
$1 million
year.
of coverage.
For $1 million in coverage.
And that's out to at least what? Age 100, right?
Yeah, that's actually to 105 here, based on
105,
the no
okay.
lapse, you know. Looking at Prudential, we're looking at preferred best, again for $1 million, it's $5,748. No lapse. We're looking at American General, Secure Lifetime GUL, that's $5,940. And that is at the preferred plus non-smoker rate class.
So these aren't really, we're talking the first, when does it start to spread? You get a little bit bigger premiums, what, about 10th place, 15th place in there?
Exactly.
See, so really the top 10 players are going to be grouped
Right
up.
there.
It's all going to be about underwriting then.
Exactly.
It's all,
It is all underwriting.
I hate that.
How many times do you have to say that? It is, though. It's all
don't-
underwriting.
I hate to say it because then they think they're important. Well, remember, you can go out to our show, write me, thebiz at brokersalliance.com. You can go out to our website, www.brokersalliance.com, and all our videos. And if you want to call us, 1-800-290-7226. When I come back from the break, we're going to talk about
You're
all this.
listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. I'm Steve Salant, your host, and I'm with Jessica Lopez, the goddess of all that is good work in life insurance and actually annuities, but we're not doing annuities this week. You know, I'm really thinking about our first segment about the dial a death benefit scenario. I brought it up before, and this is only because I just want to make sure we're kind of somewhat actuarial truth, a little actuarial truth goes out here for our clients. When I'm looking at this, you know, we were talking about the GUL. There's not going to be a lot of movement between premium if the underwriting's the same. By the way, that's
Right.
a monster assumption there.
Right.
But if it is, you're not going to see a lot of movement in the first 5 to 8 carriers. It's when you drop back 10 that you start to see people price out. And not everybody is doing very good on the secondary guarantees, the shadow accounts that they have to support for GUL.
Very true.
One heads up, actually 2 heads up, and you may know a third one. There are a few carriers that actually price really well on GUL and check it out, they actually cash value endow at the endowment date, like I'm thinking of Banner at age 120, I'm thinking of American General, and even if you say, well, of course, endowment, that far out, who cares? Well, even at age 100, some of these contracts are half cash value of the death benefit, and at your LE, your life expectancy, some of these have about 20-25% cash, and to me, if everything's equal, if I have the same underwriting, the price tag is the same, then all of a sudden I'm going to start looking at carriers like AG, American General, or Banner, because they're actually doing endowment cash, which again, at 120 may not be so thrilled, but maybe at your LE, your life expectancy, 85, whatever it is, or maybe up to 100, that kind of makes a difference to me.
It's a big difference.
It's a big difference. So why should I take 0 when I can get
something?
A quarter of my, in this case, give us a couple quotes and think about those numbers. even at your LE, it might be 25% cash value of whatever you're quoting me.
Absolutely, absolutely. And we were just wrapping up before the break in terms of giving you some examples for some of the older ages here. Looking at females age $65 million, some of the big players are going to be American General, Genworth, Nationwide, John Hancock, and this is all preferred plus non-smoker rates for $1 million. At that age, we're looking at about $13,000 annual. And those
And what was that age?
That is 65 female.
Wow, that's not that bad at all.
No, not bad at all. Not bad at all.
What about, you know, we always talk about, when we're talking about GUL and the grids, what about single deposits? Because, you know, people are paying, these are all continual pay all the way out. You know, those are the low ball. I mean, if you're just looking for term, extended term, which is basically what GUL is, basically.
Right.
But now, what if I had the money? Think about this. Right now, our accounts, if you have clients sitting in any cash equivalents, and they are sucking wind right now. I mean,
big time.
Money markets, you know, CDs, anything that's cash equivalent is really low right now. You may find out that there's some leverage to doing a single deposit, and it's guaranteed contractually one pay, walk away.
Exactly.
Talk about some of the grids on single deposit, because I think this is a play.
Absolutely, it sure is. Here's an example of female. This is somebody who is age near 67, preferred plus non-smoker. With the Viva, she's able to purchase $1 million in death benefit for $242,000 and change. Okay, one time and done. Looking at North American, $247,000 and change, same rate class, $1 million. Protective, $248,000. So as you can see, for the top three there, we do definitely have some.
And what did you say Aviva was?
Aviva is $242,897.
For what was the age group in the?
That is 67 female.
Well, if I'm at a 67 female at 240 and change, right? That means I got a 4-to-1 leverage on my money.
Right.
So if I'm sitting there sucking wind on CDs, money markets, why am I playing that? If I have an indemnification need, if I want to bless the next generation in an inheritance transfer need, could be charitable giving, could be my kids, my grandkids.
Right.
I mean, IRS approved, nonprofit, any of those things. The money is so pathetic on these cash equivalents. I'm wondering, there's a discount here when you put it in with GUL, and some of these carriers are great. And by the way, Aviva is a major player in single pay, and I've noticed in GUL, believe it or not, in 10 pay. So just heads up on that.
Yeah, it's phenomenal. What a great rate on your return for your money there. Now, taking a look at, let's take a look at an example of male preferred plus non-smoker, again, age 67. And the ultimate result for death benefits of $1 million. We have North American who comes out on top. This is $289,422 for that $1 million death benefit. Aviva, closely behind at $290,260. And then we have Protective, $302,000 and change.
When you think about it, and it runs about like this, guys are about 3-to-1 ratio. It's actually, in this case, a little bit better than that. If you're preferred plus, it's about 3.75% to $1 invested. Females are about 4-to-1 to 4.25. When we get into second to die GUL, that number is going to go up even farther. You're going to get somewhere in the 5-to-1 bang for the buck. I mean, that's leverage, that's discounted dollars. So I want to look at it. Now, when you're looking at some of these, now we're just talking non-smoker now. We're not doing the smoker. We're just talking. Now, remember, I don't know if I really like smokers and single deposits because it's money. We're talking about money. But again, I want to emphasize, if your clients have money in cash equivalents, you may want to start looking at single deposit for your traditional indemnification or maybe your corporate business buy-sell agreement, or especially if I want to create a legacy either for my children, my grandchildren, the charity of my choice, any other nonprofit that's approved by the IRS, because this is leverage. This is taking the power of life insurance, and shockingly, we're not talking about current company assumptions here. We're talking about contractual guarantees. And that's why we're talking about all this week. Guaranteed term, guaranteed GUL, second to die, things that you can take to the bank. Again, if you're a fan of being a termite, this is a little longer than term, but hey, it's like term on steroids. I love it. I do too. Well, listen, don't forget, you can watch all our shows right on our on-demand section, right on our website at www.brokersalliance.com. That's the buzz on the biz for today. Tomorrow, we're going to do GUL and smokers. I'm Steve Savai. See you tomorrow.
The Business Insurance Zone is produced by Brokers Resources Audio Video Online, the media division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.